Hello and welcome to BQ Prime. I'm Hero Dadia. Banking sector as a space has been in focus in the last one and a half month on the back of the sell-off that we started to see in the PSU banking space, which was then followed by the private banking space. Overall, there has been a rotation that's happening from the banking to the IT space. Now, whether that is a fact or not, and whether the fundamentals are strong for a re-rating or even to make a re-entry into the banking counters is something that we are watching out for. To discuss the same, joining us on the show is Asutosh K. Mishra, Head of Research, Institutional Equity Banking Analyst at Ashika Group. Ashutosh, welcome to the show and a very good afternoon.
Thank you, Hira. Thank you for calling me on this show.
Always a pleasure. Ashutosh, my first question coming to you is, we've started to see a sell-off in the last 1 month, I think since the first or the second week of January with regards to the PSU banking space. And it further intensified with the private banking space adding on to it as well. What's the sense that you pick up in terms of the sell-off firstly?
So, if you look at the reason of the sell-off, which intensified post the Adani fiasco, started it out there, where market participant is anticipating that we may see some recurrence of old asset quality problems coming back. But when we do know the different banks has given different the numbers of their exposure of the group, and if you look at the operating profit and other metrics at this point of time, I see this risk is unwarranted at this point of time. Second, when the trade starts shifting from the India towards the China, and there was a major exit from the FI side from the Indian market. There they were having the key holding of there was the banking stocks, and that's why we have seen that both private and public sector banks has underperformed because of that shifting of trade from the India towards more of the China. So I think both these has now almost settled down. Both no the news value of Adani as well as the shifting of the trade from the India towards China. So going forward, we expect the sector tailwinds, which are expected to continue in the fourth quarter result, first quarter result. So next 6 months is going to be the golden period for the banking stock in the terms of the type of performance which they are going to get deliver. So I expect this underperformance may go away in the next few weeks.
Right. So that's with regards to the overall sell-off that we've seen. But apart from that, if you see from a fundamental perspective, clearly, if we see the credit growth, that has remained pretty strong. However, what's your view in terms of the deposit growth? Do you think that could act as an overhang? Because that's something which actually needs to pick up pace.
So deposit growth is also picking up the pace in the last. If you look at last few fortnight, it is really picking up the pace as the bank is increasing the rate up, and returns from the equity and other segment has started softening for the retail investor. We have seen various media reports in the last few days about declining retail participation in the equity market. Where these all money will go? These all money will flow into the fixed deposits, which is now really giving good real rate of returns even if we adjust for the inflation at this point of time. So growth in deposit is picking up, number one. Number two, still if you look at the major portion of the public sector banks having the excess SLR holding at this point of time, so they don't need a very high level of deposit to support their strong credit growth at this point of time. They just need to liquidate their current excess SLR and put this money into the high yielding credit portfolio, and there were the NIMs and other operating parameters of some of these public sector banks may continue to improve in the fiscal year 24 too.
Right. But overall, clearly in the February meeting as well, the RBI actually expectedly raised the repo rate by 25 basis points. However, the higher inflation print in January CPI is also posing in as a risk for another hike if inflationary, expectations do not ease. Now you have the risk of El Nino that actually comes in as well on the rise as well as the food inflation. Now, do you think that could actually play a spoil sport because it could have some bit of an impact with regards to credit growth as well?
Yes. So surely these are the risk factor which is emerging at this point of time. But no, even if suppose we no take the rate growth reason for the rate growth for the last 1.5 year. One of the reason was the high inflation too, which has resulted into the no relatively higher credit growth, especially from the corporate segment. The private capex is still picking up on the corporate side, and retail at a retail level credit growth remain healthy. So even if some moderation in the credit growth takes place, it will not impact the banking sector as a whole. Efficient player will continue to gain market shares, and no, whoever have the better deposit franchise will continue to improve their performance in the coming quarter. Yes, these are some of the risk factors which we need to look into, especially if no El Nino really the way things are getting predicted at this point of time. That is a risk factor we need to clearly keep in our mind.
Right. Apart from that, from an El Nino perspective, specifically banks like CNI, SBI, or an HDFC, which are KCC heavy banks as well, right? Uh, yes, the asset quality is pretty much on a mend right now, but El Nino, how big a risk will it pose to agri players, and in turn actually impact banks who have a big agri portfolio?
See, if you look, no, normally these agri portfolio from the 2 to 3 years perspective, 2 to 3 year cycle, they have done quite well. If suppose in this no season we will see a lower rain, then this portfolio may see some increase in the NPA. There, we cannot deny that. But if you look from the 3 year perspective, again this portfolio will get normalized, and we are also going to see some election related activities to start picking up. So that may also have some negative impact if the El Nino impact will be very huge. That's why I said El Nino is important things which we need to closely watch out for. But whether we see any major risk coming on asset quality because of this, we don't see it. Whether there, even if suppose these assets will slip into the NPA, these will be get recovered in the next few months.
Right. So, from a PSU bank and a private sector bank perspective, where are you seeing further strength in terms of one, asset quality, credit growth, deposit growth, and from a performance perspective?
So I am not looking from the private and PSU perspective. I am looking at a bit different at this point of time.
Mm.
So if you look at the third quarter performance, you have seen that two divergent trend has come. One, the bank with having a home loan portfolio has really seen a very strong growth in domestic NIM. What was the reason? The reason was when the RBI is increasing any rate, that is getting passed on to the end customer. We all are facing this. All are as a home loan borrowers are facing this. Rates are going up. Okay, but the cost of deposit of these banks are not going up. At the same time, many of these banks which I am referring here are having a 40 to 50% as the CASA ratio. So over the impact of increasing deposit rate is also much more lower in their overall earning part of it. So my view is that any banks which have a more than 25% of the home loan portfolio at this point of time will continue to gain, or I say that will have positive impacts on their operating performance because of this rate cycle increase. If RBI go for another rate cycle increase also, this will be get passed on. None of the banks are really undercutting at this point of time. We have not seen any indication of that coming in the market. So from that perspective, I clearly see the banks having a higher CASA and higher proportion of home loans are the best beneficiary in the current scenario. So the names comes to me is HDFC. HDFC Bank will oppose that, but ICICI Bank at this point of time, State Bank of India is one of the major beneficiary coming. Axis Bank is another major beneficiary, and ICICI Bank is there. Kotak is also picking up in that line. But the three major beneficiaries, SBI, Axis, ICICI. Somewhere from next year, HDFC banks will also be part of this. But yes, there is a time for that.
Right. So overall, Ashutosh, would it be right to say that probably this could be the time to start bottom fishing in terms of the banking space, taking into consideration that the stocks have corrected and the valuations would be much cheaper?
Yes, you are absolutely right. In my view, this is one of the good opportunity to accumulate some of this good bank. That's why I say that. You just have to think the increase in the deposit rate, the impact is a far lower than the positive impact of the increase in the rate on the home loan portfolio of these banks, and that's what is getting reflected into the earnings of these banks out there. Even if suppose there is some issues on the asset quality front going forward, like we discussed about agri portfolio, we are discussing about few corporates here and there. The access provisioning that these banks are carrying at this point of time is a huge. They have they don't need additional capital at this point of time. So the improvement in the ROE and ROA will continue, and in ROE will continue, and ROA they will be able to sustain it out there. So I clearly see that this is a more of a noise at this point of time, and this will get settled down. And whenever the market start taking a relook, more probably after March or from the next result season when it started, these stocks will start again participating aggressively in the upward movement of our market.
Right. And very lastly, Ashutosh, if you see in terms of the outstanding agri books across banks, which are the banks that we should keep our eyes on, to get an update in terms of what's happening? That's one. And secondly, if you see from the PSU banking space, they have a higher agri NPA versus private banks as well so far. So taking both these parameters into consideration, what banks would you advise investors to keep an eye on?
See, from the agri portfolio perspective, surely PSU banks has a relatively poorer track record than the private banks. And that you have to go into the business model of many of these banks. Like private banks normally go for the gold-backed agri loans. Even SBI has a very large portion of their gold-backed agri loans, where they give the agri loan, but at the same time they are backing of the gold as well as the land, both together out there. So if you look, some of the public sector banks will surely come under the pressure point because of that. But if whether that is any major impact on the earnings, I don't think so. It may have an impact of 30 to 40 basis point on overall their ROE, but I don't see any major impact because of this part of it. Yes, we need to see, especially for the second and public sector banks, and there this impact can be relatively large, like Union, Bank of India, Canada. I don't think so. Indian Bank, UCO, all these banks.
Yeah. Right. All right, Ashutosh. Thank you so much for speaking to us at BQ Prime and giving us that view clearly. As Ashutosh has been mentioning as well, probably this could be a time to start bottom picking in terms of the banking space as a whole from a long-term perspective, taking into consideration the valuations as well as the correction that we've seen in the last 1 month on the banking names. Thank you for joining us. Stay safe and speak to you soon again.
Thank you.